Hello, my name is Steve Bigelow with the Candlestick Forum. The market direction is very easy to analyze. The T-line rule. Do not ignore the T-line rule. When you see closes below the T-line, especially in the indexes, that tells you there's been a major change of investor sentiment and the probabilities are extremely strong. You're heading lower to probably obvious targets. This allows the candlestick investor to be shifting their portfolio trades immediately versus what I used to do in many years past, that when it looked like everything was great and it might be turning around, but man, we're just hoping it's still going up. The probability factor is clearly illustrated with the T-line, that as soon as you trade below the T-line, there's been a major change of investor sentiment. Even more so when we see the NASDAQ also showing sell signals closing below the T-line. And then notice how last week they could not get back up through the T-line, even though it traded positive most of the day. There was the selling, and now we can analyze what the strength of the selling is. We're still in a downtrend with stochastics. And look at the trend kicker signal. They open here, close here. Today they opened below the previous day's open and went the opposite direction. That's your trend kicker signal, which produces extremely high probabilities. The force of the selling is going to continue this downtrend. So the benefit we have as candlestick investors is knowing what the signals and patterns are illustrating for us. We've been trading WCAS on the long side because notice the fry pan bottom, and here's a clear illustration of why the candlestick signals and patterns have benefits. Notice what the price move was today when the markets were selling off heavily. Candlestick patterns have a built-in indication of what's going on in investor sentiment, which usually does not have any correlation with what the overall market is doing. Our chat room has been trading IMTE because of the fry pan bottom. And notice what it hasn't been able to do. One, close back below the T-line. And two, notice what it has done when the markets are selling off. Investor sentiment works the same way time after time. We can identify where the strong price moves are in spite of what the overall market trend is. Now, that means you don't want to always go against the flow. Candlestick signals also illustrate what the nature of investor sentiment is doing. The bigger the signal, the more compelling there's been a change of investor sentiment. A lot of people say, well, I don't want to be chasing a stock that's already cratered. If you know what to expect after a hard sell signal, you're in the right place at the right time. You're not chasing. We're looking for these big indications of a major change of investor sentiment that's going to continue your downtrend. A big bearish engulfing signal, closing below the T-line, failing at the 50. Where do you think the next target's likely to be? As we saw in PAC today, go right to the 200-day moving average. We can use the strong signals like a bearish best friend that would illustrate a J-hook pattern. That was our recommendation for going short on AZEK, that if it opened lower, you were in a wave one, wave two, wave three. Not only did you have the recognition of a failure at the T-line, a failure at the 50, and a failure at the 200, but it told us if they were opening lower, now they were completing the pattern that we would expect, the bearish J-hook pattern. This identification allows us to get into trades at the appropriate time, because if we see a bearish J-hook pattern failing at the T-line, look for wave three to start on a lower open. The more you can put into your analysis of candlestick reversal signals, such as the Dagwood pattern. A Dagwood is an evening star signal followed by a doji sandwich, in this case, a doji trend kicker. That tells you not only do you have a sell signal, but you have a sell signal again with a trend kicker. What's that imply? There's more downside. This is the opposite of the McMuffin. The McMuffin is a bullish signal, a bullish Morningstar signal, followed by a doji sandwich, or your morning sandwich, the McMuffin. That's double the indication that they're going to be in an uptrend. So right now, with the expectation of more downside, we've been recommending short positions that have been working extremely well over the last few weeks because of one simple factor. Once they started closing the indexes below the T line, the probabilities of being in the correct trade was dramatically in our favor. These are our trades are not only found by simple scanning techniques, but every single day in our chat room, everybody's coming up with good short or long positions or signals. This allows an investor to have a multiple supply of the best trades available during a downtrend. That'll be it. We'll see you in the chat rooms.